Here's a wild question for you today. What if $1 could be in two places and do two jobs at the same time? Imagine that. Your money paying for your life today, but it's still here and growing for your future. And if it sounds like a magic trick, you're in the right place.
Yeah, but it's not magic. In fact, actually, banks do this every single day with your money, with my money. The real secret is you can do it too. And today, we're actually going to show you how.
Stick with us because at the end of this episode, you'll definitely never look at $1 the same way because you'll be looking at it two times, for sure. Welcome back to the Banking Bros Podcast. I'm your host, Jay Dew.
And I'm Jonah.
And we're going to talk about how you can get your dollars moving and grooving for you at the same time. Moving and grooving. We talk about the save and spend system here. And the magic behind that, Jonah, once again, is it's the same dollar being saved and being spent at the same time.
There it is. And so that's confusing for a lot of people when they hear it for the very first time. And if that's you out there, then stay tuned. Listen to the rest of the episode because not only are we going to break it down, but we'll tell you exactly how you can do it also in your life. That really is a key, a super, super beneficial key to financial success as you move forward. It is really, really tough to save a bunch of money, to have it, but then need something. Something comes up, right? New car, new house, maybe even you lose a job, you just need to pay the bills, and then all of a sudden you see your savings deplete. So having $1, but allowing that dollar to do two things can really be eye-opening and a key to financial success. So we're going to walk you through it in this episode.
All right, so be prepared, ladies and gentlemen. This isn't coming out of nowhere. This entire idea is sponsored by our Save and Spend System. So if you go to saveandspendsystem.com, you can get started with a video absolutely free to walk and talk you through this outside of the context of the 4 parts I believe we have today that we're going to walk you through. But the Save and Spend System is where this comes from with guaranteed lifetime income, ladies and gents. So part 1, Jonah, how banks use that same dollar twice. You mentioned banks do it.
I did.
How does it work?
Yeah, so think about a bank for just an example here. So again, every Friday, most people in the 21st century where we live are going to have direct deposits getting sent directly to their local bank or their credit union, whatever they're using, right?
Yep.
And so what that means is on Thursdays or Fridays, probably more Fridays, your local banking institution gets deposits from probably everybody in town. So I got a sound for that.
There it is.
It's a bunch of money.
Now, before you get into the explaining how it works, we all kind of know how it works. This is my favorite thing to be thinking about. On Thursday, the bank tellers see that everyone is in the red. And on Friday morning when they log in, they're like, okay, everybody got paid. Because everyone's broke on Thursday. True? I mean, Thursday's got to be the lowest spending days. Maybe Wednesday, but they got to be the lowest spending days, like across.
I bet you it's Wednesday. In the 21st century, I bet you it's Wednesday because you can get paid. You can get paid early, and there's a lot of get paid early things now where you can get a loan a day or two early. And Thursdays are going to be the college nights and your thirsty Thursdays at the stadium and stuff like that. I bet you it's Wednesdays.
You think it's Wednesdays? Like people don't spend money on Wednesdays.
I bet you it's
midweek.
Wednesdays.
They're definitely at work. It's not a short day. It's not like, oh, tomorrow's Friday. I only have to make it one more day so I can go out tonight.
The concert, the comedy show,
they're on Thursdays. They start on
thing.
Thursdays.
Yeah,
so Wednesday.
I bet you it's
let
Wednesday.
us know if you're out there listening to us in a podcast on your YouTube channel, looking at the vlog style video of this. Let us know which days you don't spend money.
You got no reason to get off your meal plan on a Wednesday. Okay. You got no reason to not go to the gym on the Wednesday. I bet you it's Wednesday. Okay, people don't spend money.
All right, so Jonah, the bank gets everyone else's money on payday, and then what happens?
So here's the key. Your paycheck gets deposited in the bank, but think about the banking institution on the corner, right? Okay. Where I live, there's like 6 banks within like a mile. I got very popular ones. I got some credit unions. I got ones that, it seems like, who banks in there? I've never heard of that. But obviously people bank in there. They're doing great, right? Okay, but think about it. They have to pay the light bill. They have to pay the rent, the mortgage, the lease. They have to pay all that or they bought it. They have to pay the employees. They have to. Does this make sense? The bank also needs to earn money. So if your paycheck gets deposited in the bank and the bank does not get to keep it, they have to have it readily available for you if you want to come in and withdraw it. The question is, what does the bank do? How does the bank make money?
But
right?
a lot of people actually get this question wrong. Many people know. Many people know the answer. It's probably obvious to 50% of our listening audience out there. But some people say, oh, they invest the money that came in.
Yeah. And they do not.
That is wrong.
They do not invest the money that came in. So what banks, it gets a little tricky depending on how detailed and deep you want to go into the banking system that's set up in this country. But generally speaking, I'll give it to you general, and then we can go into specifics if you want to. But generally speaking, what the banks need to do in order to generate income is produce loans. They absolutely have to produce loans, but they cannot possibly loan out the exact dollar that you just gave them, because what happens if you come asking for it next day, right? And so what the banks have the ability to do is the banks actually have the ability to loan out kind of how would you say it, kind of dumbed down, just everyday talk, through numbers on the computer, I guess.
They're
right?
able to loan out more than they took in.
Yeah, they are able to loan out more than they took in. It's actually called fractional reserve banking.
Yeah.
And basically put, I think it's about a 10 times multiple right now. So if you were to deposit $1 to the bank, they've actually got the ability to loan out 100 currently. So that's 10 times multiple.
That's not 10 times. What's 10 times 1?
Yeah, 10. So my fault. So it's a 10
All
times multiple currently. So you loan them $1, or you deposit $1, they've got the ability to loan 10. You deposit 100, they've got the ability to loan 1,000. That's the 10 times multiple that banks play with. And so when banks get your dollar in, that actually unlocks for them the ability to, quote unquote, use that dollar more than once. That dollar now sits in their reserve coffers, and they can now have the ability to go loan. And of course, loans is how the bank makes all the money.
Right, because the loan that they're offering to you, cards and cars, mortgages and business loans, is going to pay back principal plus interest. Now, at the end of the day, Jonah, of course, when the doors close, after you've paid the principal and the interest back, and they've locked their doors at 5:30, they call that interest profit.
Yep.
That's the money they keep. Because how much of it do they give to the account holders? What is your bank right now? I'm sure you use a commercial bank for your Visa transactions.
I do, but I don't know the interest rate on that stuff.
So
I can look it up here.
Yeah, what are they paying you out there? Put it in the comments if you've seen something out there that they're paying you if it's above 0.4.
Do you want me to look up a checking account or a savings account? That's really the question.
Let's do. Well, it doesn't matter either one.
I'm going to do a checking account here because most everybody's got checking. Some people don't keep savings.
He's looking
Some
up
people don't
Wells
keep
right
savings in the bank. Like I don't keep my savings in the bank. So I'll look at a checking account and we'll see. Well, when you look at checking accounts, right on their homepage, it says, hey, there's better rates on savings accounts. So this is not going to look very good for this checking account here shortly. But I think I'm about to find it over at your favorite bank. Maybe not your favorite, but the one I use, Wells Fargo. Oh, we got into a page where I thought we would have it, but
I wouldn't even know where to look. But you used to work for a bank, so maybe you're better at finding things on their websites.
Yeah,
oh, there it is.
No, these are savings rates.
Savings rates.
I was trying to see if we could find checkings rates.
Okay,
I don't even want to tell you, but yeah, there's a way to save savings account at your favorite bank, Wells Fargo. It's not. What is their slogan? I keep thinking TD Bank's slogan, America's favorite bank, even though TD Bank is Canadian. So that was a marketing play.
Well, of course, it's a marketing
Wells
play.
Fargo's slogan is is it every day, every something?
I forget. I have any idea. Who knows out there?
Anyway, their way to say savings account right now, we just went to their website and pulled it up. Their standard interest rate is 0.01%. Their annual percentage yield, APY, 0.01%. But they do have a $5 monthly service fee. So that'll surely take
How much money do you have to have saved
if you mess that up.
So here's what's crazy. So how much are they charging for a loan? What type of loan might it be?
Yeah, we can probably look that up on their website also.
Okay.
For those of you who are just...
so if you go get a personal loan, we found personal loan.
Yeah, you personal loan, auto loan. Which one we want to do? Personal?
Let's do auto because personal's higher.
Might not be higher. Auto.
No? Okay, yeah. You pick.
I'm going to do a personal loan.
Okay.
personal loans. We're going to jump into that. Okay, they got a big thing right here, a big ad that says fixed interest rates as low as 6.74 APR.
Okay, so here's if they're paying you 0.01 and they're charging you 6, do you understand how much bigger that is? That is not 6 times bigger. That's 0.01.
Mm-hmm.
So 6 is like 1,000,000 times bigger.
That's right.
Right? Because we've got to get to 1, and then we've got to go 6x to get to 6.
Look at this. I highlighted it right here in the middle of the screen on wellsfargo.com. Predictable monthly payments and the rates starting at 6.74%, going all the way up to 26.74% APR on a personal loan. Right.
What a business.
And so what unlocks the ability for conventional and everyday banks, your favorite credit union, whatever bank that you're using, it really does not matter which one, what unlocks the ability for them to charge interest at all, what unlocks the ability for them to loan money at all are the deposits that actually are stationary in the bank. Deposits.
Yeah, a lot of folks don't realize that either. I didn't. When I first got on this journey 10 years ago this week, we're recording this at the beginning of September 2025, so it is a Labor Day weekend holiday. When someone first told me about what we now call the save and spend system or infinite banking, I had no idea how banking actually worked. I had no idea. I didn't have credit cards at the time, so I really was lost. Your dollars go inside the bank, in the vault, in the coffers, in the drawer, and now loans can be unleashed all over town. So these are the people that you work with, including yourself, getting loans from the money they just put in.
Mm-hmm.
Okay, but now the interest goes to the bank. They're going to get very rich and wealthy off this. Number 2, the people that you live around, the people in your neighborhood, people who work, people in your neighborhood, and your family. Everybody's got their dollars in the bank. Those are the 3 groups of people.
Yeah, when we dumb it down and we talk about this like one loan like we just did individually, you can see how, man, that would be a lot of money. But when you really think about your neighborhood, like I live in a small community. There's only 50 houses in my community. So this is relatively small. Right? Okay, but when you think about every house, 50 houses, every house, what does the percentages say? The percentages say that 1 or 2 or 3 people out of 50 houses don't hold a mortgage right now. Everyone else holds a mortgage.
All right.
47 of them hold a mortgage.
47 mortgages.
When you think about cars, so if there's 50 houses,
that's 75 cars.
Yeah,
least.
Easy. Yeah. Minimum, probably more than that, because there's a guy on the corner who's got like 6 Jeeps, always parks them in the street. You know what I mean? So this is 100 cars, 125 cars, easy.
Right.
Think about car notes. Again, percentages say maybe 10, 15% of those cars are paid off or paid for.
Okay.
But pretty much everything else is leased or financed.
Right.
So now take one small community where I live, 100 cars, 50 houses, and think about how much income that is for the bank. Every single month, the bank is getting back principal and interest they call profit. And so it's this perpetual cash flow machine. Every time they do a loan, the bank just increases their cash flow. That's all they do. Because now we've got, think about houses, 15 years, 30 years, cars, 5 years, 7 years. Maybe you can go longer than that these days. I don't really
sure.
know.
And that means every other community, one person's got a boat.
Yep.
Somebody's got a financed appliance in their house, some sort of something.
Yep.
Right?
Maybe it was the fence in the backyard, took out a personal loan for that. Maybe it was they bought a really, really expensive couch or TV, so they financed that stuff.
And how many credit cards are across those 50 houses?
Right.
And if those come from banks, of course they don't have to. We're just saying the banking business, the business of lending out money and getting it back with principal and interest is crazy. So that's how everybody understand now? Have you bought in? Banks use your dollars more than one time. Part 2, Jonah, how families traditionally use dollars.
Yeah, so, I mean, for us, you just learned about the bank. Maybe, again, you already knew this, but we brought it back to your attention. Now, think about how the traditional American family uses dollars, right? So we get paid, we deposit the dollars, we spend the dollars, we pay the bills, and then that means they're gone, right? We do that very often. Or you can get paid, You can deposit the dollars. You can then transfer some of them to savings, right? I'll save some of these dollars. And like we just looked at on the bank's website, you earn almost nothing for doing that. This is not the same spread that a bank is getting when they're using dollars. When dollars come into the bank, they're using them differently, and they're creating a humongous spread. When American families, traditional families, get dollars, we're creating almost no spread with the dollars. We literally just spend them and they leave.
They're just in and out.
Right.
That's how I always did it, for sure, 100%. So reminder, each dollar in the normal American family here is only doing one job. It comes in, it's maybe housed somewhere that might be a bank product, like a savings account or a CD, and then it still is spent. So it did not do very much for you, if anything at all.
Right.
All right, so you already heard that savings accounts can't keep pace with inflation. No chance. If they're earning 0.01, which we just looked at on Wells Fargo, major bank in this country, all over North America, and inflation is 3 to 5%. Remember, if it's 0.01, how many times do we have to double that? 0.02, 0.04, 0.08,
right? 9900
to
get to 1.
To get to 1, and then you have to triple it to get to 3.
Yep.
So you're losing money like crazy if you're a saver. Robert Kiyosaki said this a couple of years ago, and by a couple, I mean 20, 25, and I had no idea what he was talking about. Savers are losers. And that's the only thing that I knew to do was save. And I could not figure out for years what even that meant. Savers are losers. How? Like, I put my money, I still have it. Big deal. We'll get to Robert Kiyosaki again in a second. So here's the problem. Families are going to be stuck. You're going to be stuck because you're going to have to keep working. You're probably saving in a very inefficient environment, and you're never going to gain financial freedom. You'll always have to work till you die because you're not able to outsave what your money has to do for you or how much money it can make. That's a big trap. All right, Jonah, part number 2.5. I want to go to something here, flipping the script. I want to go to something here visually. All right. Robert Kiyosaki, I just mentioned him, and he has got a cash flow picture I want to take a look at here. So let's take a look at this cash flow pattern between rich folks and middle class folks. So we're going to put that on the screen for you. Remember, you can find us on YouTube. Our YouTube channel is called The Banking Bros. And if you go there, you're going to be able to see this shortly. Hopefully, we'll get it on the screen for you. And it's the income statement and balance sheet. Also, things I did not understand at all when I first read what's his flagship book. Have you read it?
Rich Dad, Poor Dad.
Yep.
I have read it. It's been a while.
I need to get back into it, I think.
Yeah.
There was a lot of good stories about Hawaii. And I think I read it after I went to Hawaii. And so, I was like, man, I can imagine working in a grocery store in Hawaii. That doesn't sound so bad.
It doesn't sound so bad.
You're right. And then he tells you, no, it was terrible. We were stacking dimes. I was like, still, it doesn't sound that bad if I just had to work in a grocery store in Hawaii. Okay, so our producer can get that up on the screen for you. We're looking at an income statement and a balance sheet between a rich person and a middle-class person. So if you're looking at this, the rich person has money come inside their life and they do something completely and totally different with it immediately as compared to the middle class person. Now, Jonah, we've been talking about middle class people so far. So they work their job. The income comes in on Fridays. It goes to the bank on the corner by CVS and the Waffle House, and it goes to their payments. It goes to the bank with interest. They have to keep working just to give the bank more money than they deposited because they deposited. Have you ever deposited less than 100% of your paycheck into the bank when you had a job?
Less than 100% of my paycheck.
Did you ever tell your boss, only do half?
And then do what with the other half?
Keep it. Go out. Thirsty Thursday, you just said.
No, I've never done that.
Okay, so
even if I was going out, the paycheck got to be deposited.
Right,
Right.
because I'm just swiping, right?
Yep.
Okay, or I'm just going to take a withdraw for with the $3 at the ATM machine, right? $3 fee. So the middle class has money come in, goes to the BANK on the corner, and then it goes out to mortgages, car loans, credit card debt, school loans, and their groceries and expenses and bills, Netflix, right? So that's what it does. But a rich person or the bank acts differently. When money comes in, they turn it into an asset. That's huge. They turn it into an asset. So maybe they have a job, sure. Maybe they have a salary, but they also might have income from the assets.
Yeah.
They take the money and they do things. Look at it. Real estate, stocks, bonds, notes, intellectual property. So when we talk about the save and spend system, we're literally talking about something very, very close to notes. We basically have contracts that we buy that are guarantees for income. We buy things that produce things.
Yep.
That's what we do first, because if we just sit our money in the bank, we know they're going to use it as an asset to produce more cash flow. We're going to do the same thing. So if we do that, we can become a rich person and stay in that category. So now we're going to buy things like contracts, like real estate, and other things, kind of combine a note and a bond. And then you get into our secret sauce. And what does it produce for us? Income. Our salary, our job, our job, our gifts, our fantasy football winnings turn into income. We buy things that produce dollars. That completely changed my life. And I think this visual is really helpful for a lot of people. And before I go into my expenses and my liabilities, I make my dollars go to work for me.
That's important. I think a lot of people just miss that. We are not really taught that coming up. You're really only going to be taught it if you've got someone in your family, a parent, maybe a grandparent, who learned that themselves or are in business and can figure it out, had a mentor who could teach them. Or, of course, if you are proficient in making sure that you were studying that sort of thing. You read all the books. You found yourself a YouTube channel, a mentor, a colleague who could kind of walk you through it and teach it, because this is not something that the average American grows up with. And so
it's not. But, you know, one of our last podcasts, if you go back 1 or 2 podcasts, I had a guest in here. His name is Sky Richardson. You're going to love that podcast. But he talked about being different than the average American. I feel that the average American you just described is how we grew up, is how I understood things. But he said, my dad said that when we were growing up, me and the other brothers, we had to put our money to work and stash it here and do things with it so it produced. We would buy things. I think they had mutual funds, I think he said. Go back and listen. Check me on that one. And he said Dad would show us the statements. And I'm like, what type of family was this? Like, I had no idea that money was supposed to buy things that produced income. And then you spend profits that your money makes. You spend the money your money makes. I had no idea. When did you figure it out?
Man, I was an adult when I figured it out. I mean, again, I always had a unique relationship with money because I like purchasing things. Like, we live in a consumer society. Got lots of consumerism. I've got it, same as everybody else. So I do like making purchases, but I don't like spending money that I worked hard for. I've had that for a long time. So it's really easy to say, $5, $10, $100. It's much harder for me to say $1,000, $5,000, $10,000. And so as I would hit these like kind of milestones coming up of saving or having this much sitting someplace, it would be really, really hard for me to spend it. And so because I wouldn't spend it, I'd want to do something with it, right? And so you just start to look into things. Like you mentioned earlier in the episode, I was working at a bank. So like, I knew about CD, right? Well, one of your first jobs during school, out of school, was like working at a grocery store. So you can tell me the code for bananas. I did not work at the grocery store. I don't know the code for bananas. Like
4011.
There you go. I don't know that. Or if it says, put in your code and the lights blinking at the self-checkout and a person, like I don't know what's going on. Please just come over here and let me check out. I don't understand.
Why am I waiting so long?
Yeah, I don't understand why my ice cream has done this. Just let me leave. I don't know what's happening. I've never worked in there.
Speaking of that, very, very tangential. I had no idea that it was, people did not know it was a scale for the first 10 years.
Is it a scale?
Well, I mean, where you put your groceries, like you have to place your item in the bag.
Oh,
you know what I'm saying? Self-checkout. Didn't know it was a scale. I didn't understand that it would weigh things, that your...
I think I knew that was a scale, yeah.
Yeah, like, this is a scale. Like, literally the code.
But you can overwrite this. You can override the scale for sure. You by hitting or something, because sometimes it doesn't make any sense to put it on there. Your water's on the bottom of the cart. Like I'm going to beep the water and then do the code, so I don't have to put it on.
Well,
the thing,
I mean, I knew.
right?
Yes, I knew that. So it's interesting,
but all I'm saying is I had a relationship with working in a financial services space. So I know about CDs. I sold a CD to the last 10 people in the last week or whatever. I know how they work. I know you have to lock it up for a year. You probably want the 5 year. The 5 years the better interest rate, and then you don't get it for 5. Like I know that this exists. So I've seen people with it. I've seen people without it. I've seen people who are calling in saying, "Can I get it out early?" Like I already know. So I know about interest rates. I know about savings accounts. That's what I know. So it was just a little bit of a different relationship because I worked in an institution that kind of taught me those things. You also hear other things, right? People call in and they say, "Oh, I don't like your bank. It doesn't have this thing that the other bank has." So then you start learning about other banks because it's like, "Oh, that would be better." Didn't know. Right. Didn't know that existed.
Didn't know. That's not what they taught me in training.
Yeah.
Okay, so now here's part 3. We're going to flip the script, and we're going to introduce you to the asset that is going to work your dollars in 2 places. Passively, guaranteed. It's the ideal asset we call the system, the save and spend system, and it helps us pinpoint what the crap is infinite banking.
Yep. So let me explain to you how it works. If this is your first time hearing it, I'll try to make it simple. First things first, you are purchasing a properly designed, I'll come back and explain that, whole life insurance policy. So this is not just your run-of-the-mill typical whole life insurance policy that you can maybe find online or just going down the street to your first life insurance office you see. This needs to be properly structured. What properly structured means is that inside of life insurance, just like your car insurance, there's lots of options to choose from. Think of your car insurance for a moment. You could have picked towing coverage. Maybe you did, maybe you didn't. You could have picked rental car coverage. Maybe you did, maybe you didn't. You could, and in our state, you can pick personal injury protection. It's medical bills. Maybe you did, maybe you didn't. You don't have to, right? There's options, same style of policy, meaning options inside a whole life. There's options. You got to pick the right ones. If you don't pick the right ones, it doesn't work. Doesn't work the way that we're describing, right? So properly designed, picked the right options inside of this whole life insurance policy. And when you do, you're actually purchasing insurance. This is really, really, really important. You're buying insurance. It is insurance that will be there for your whole life. Your whole life could end tomorrow. Your whole life could end 50 years from now, but it will be there for your whole life. You never have to worry about it running out. You never have to worry about it going away, which means as soon as you purchase this, you can start having some different conversations with your family, just like you mentioned in the last episode with Sky that you should go listen to if you haven't already. You can have different conversations. I've purchased whole life insurance, so I get to have different conversations with my spouse, with my kids, right? My oldest is 7, but he knows all about insurance. All about it, because you buy insurance if you want to protect something that's important to you. That's what he knows. So he knows we got insurance on all sorts of stuff. And he asked me the other day if I had insurance on the Nintendo. And I was like, I do not. It is not that important to me, right? Important to you, not that important to me. I'm not going to put insurance on the Nintendo.
Mario insurance.
He
falls down the wrong plumbing hole. Can he be? Can we have indemnity?
There's other things you can get, like home warranties and whatnot, that work really similar to insurance, that you can absolutely get insurance on your Nintendo. If you've got upgraded Nintendo and you put a lot of bells and whistles on it or upgraded it a lot, you can absolutely insure that item itself through insurance companies, sure. But I just didn't. So you buy this insurance. This is really important. And because it's whole life insurance, the only permanent insurance product that guarantees money one day, there is equity value, or the insurance company itself will call it cash value. I like cash value a little better than equity value because cash value sounds a whole lot like cash, which is what it is. So equity value or cash value, that's guaranteed each and every time you make a payment, each and every year. It's guaranteed to grow. You've got dividends that the insurance company will give out to you once a year from a lot of companies that we use. It's really, really cool. And so what this means is that when you pay money for this life insurance policy that is designed to work like this, it does a few things for you, or like the name of this episode, more than one thing at a time, right? It buys you more money for your family, your friends, your church, your charity after you're gone. Guaranteed money, buys it. Second, it gives you equity value that you can use and spend whenever you want to. That equity value is just coming off of that future payout, which is really cool because that affords you a couple opportunities and liberties that regular income just doesn't, right? Mm-hmm. And third and lastly, it earns, it grows, it produces. So it can do that through guaranteed interest, through dividends, through all sorts of different kind of ways that are a little more tricky. And if you want to call us and ask about it, we'll explain it to you. But it's doing more than one thing at a time. And this is really, really cool when you compare it to what you do every day with your money, right? Like we talked about earlier in the episode, I earn it, I give it to the bank. When I need it, I spend it, it's gone. We no longer do that when we have this policy. We earn it. We put it into the life insurance. I just bought my family one day, or friends or church or charity, more money, guaranteed. And since I'm here right now and I could really use the money too because I like going out to eat and I like Netflix and I like driving cars and stuff like that, I'll just use the equity value, the cash value that is guaranteed to grow and be there every single year. And so I get to do more than one thing with my money. Because of that, we use these properly designed whole life insurance policies as our banks. That's why there's the book that we talk about often and that we hope you've read on this podcast is called Becoming Your Own Banker. That is why we encourage people when they get started with these policies to think of these policies as your banking institution. If it is more helpful for you to think of this policy as a savings account, you should. Because if you think of it as insurance, you'll trick yourself.
That's true.
Right?
Nelson Nash, the author of this book, actually mentions that. Toward the beginning, Jonah, if you're ready, I'd like to read a little bit here, and we'll talk about some of the things that we can do now that we have got our dollars working for us inside whole life insurance. Capital W, don't let yourself throw away that word. Okay, so here we go. The whole idea, page 3, version 5, 5th edition. The whole idea is to recapture the interest. Isn't that what we've been talking about?
Uh-huh.
Ladies and gentlemen, we have not said anything about investments on this episode. The whole idea is to recapture the interest that one is paying to banks and finance companies for the major items that we need during a lifetime, such as automobiles, major appliances, education, homes, investment opportunities, business equipment, etc. Now, Jonah, here's the question. Why does that work? Why in the world does it work?
I'm not sure I understand exactly where your question's going, but I can still
It's because we can collateralize that we have guaranteed loan provisions to be able to collateralize that cash value and be able to save our money in premium. If you're watching us, the visual's back, the 3-cup setup, our premiums go in and it buys a separate pool of money. Sometimes I have to say separate pool, Jonah, a lot because people need to visualize that it's not my money that I'm taking. It's portions of, pieces of the insurance company's pools of money that I bought, the separate pool. So cash value is simply, do you see where I got my cash value from? I've got some fake money on the table here in the 3-cup setup. Small, larger, largest right here. Cash value is how much of the equity, cash value that I can use of the pools of money that I bought. The reason why it works is because when I borrow against my policy, my money stays in. My money continues with all the guarantees that you mentioned. It's guaranteed to grow. It's guaranteed not to go down or backward. There's no investment. It's guaranteed to be a level premium. It doesn't cost more, and it's guaranteed to have more interest tomorrow. So because of that, I now can finance these major purchases.
There you have it, folks. And so that's just one way that your dollar can really do 2 jobs at once. If the banking institutions, the credit unions, the third parties are doing this already, we think that you should probably do it also. It's really hard to figure that out by yourself when you're taught the traditional methods. When you're taught 401ks or IRAs or 403bs or TSPs or HSAs, I can keep going because they just make up numbers.
457s, 403.
Yeah.
Did you say 403?
I think I did. I added a B, 403b.
Yes.
I'm assuming if there's a 403b, there's a 403a.
I believe there is, and I think it might have to do with nonprofits.
Yeah, something.
Yeah.
Right? 501c3, there's all sorts of... Anyway, when you're taught this traditional government-sponsored stuff, anytime you are thinking about, is it government-sponsored, think to yourself, does it have a real name or is it just a bunch of numbers? Right? Is it an abbreviation? government sponsored, more than likely.
There you go.
Right? But anytime you're taught that, it's very hard because none of those plans or programs help you do anything but kind of stay in the cycle, stay in the rat race. And so what we are teaching is, of course, outside of government sponsorship. We're saying, hey, you can do this. You can do it outside of the government. You can do it yourself. And that can really drive your other things that you want to do if you'd like to, right? Mm-hmm. If you're very interested in doing investments, go for it. Absolutely. I'm interested in some certain investments also, but I want to use cash value and equity value to do it. I don't want to use my money because the investment might go south and I might lose my money, and that's just not where I want to be. So before we end the episode, let's give a quick shout out to our fan follow, which this week is coming from our YouTube audience. This is Wealth by Wisdom. He has been following just recently. And so what we're going to do is actually give you a little bit of a shout out on the episode. We want to say thank you for subscribing there. And if you have any thoughts, questions, comments, or concerns, you should put them at the bottom of this video or at any other video. And what we'll do is make sure we answer them. We'll get back to you. We'll reach out to you. We can DM you or whatever you want us to do in order to answer those questions. But we do appreciate you following. Thank you so much for doing so.
So let's circle back. $1 can really do two jobs with this infinite banking idea. That's exactly what's going on.
Yeah, and here's the cool part, in my opinion. Once you understand that, you'll start asking bigger questions. Well, what if my dollar could do 3 jobs at once? Hold on a second. What if my family could recycle money for generations and not let banks get profits off of it, right?
So that's what we decided to do here. We're the Banking Bros. We decided to show you several years ago now. It's our anniversary of first learning this process as a personal small P practitioner. How do I practice this? And now we're sharing it with you. So this is my personal 10-year anniversary of hearing about how banks work and how I could do this myself. So we're going to help you make it possible in your life.
Yeah, but if you're curious about setting this up in your own life, what you should do is reach out to us. There's a link in the description of the YouTube video. If you're listening in your favorite podcast app, there is a link in the show notes. If you catch this somewhere because it got chopped into a reel or a short and you're on YouTube or TikTok or whatever, just click the link in our bio. And what we'll be happy to do is reach out to you on a free consultation call and walk you through how you don't have to play the banks game. You can just do it yourself. So we appreciate you, and we'll see you next time.
You are now tuned to the Banking Bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
If you enjoyed this episode, you'll love us at saveandspendsystem.com. This episode is brought to you by our Guaranteed Income for Life system. We'd love for you to walk and talk through that video, and you can learn how to do it on your own time and then book a call for a free consultation with one of our coaches about how you can get code cracking cash flow in your life.